Unlock 5 groundbreaking investment trends reshaping Singapore's financial landscape, where AI meets traditional Asian investment wisdom for explosive growth potential. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've produced over 600 videos with more than 280,000 watch hours as of November 2024. I also focus on regional and world economy topics. Today, we're diving into something that's changing the game for investors right here in Singapore. Let me tell you why this matters to you, especially if you're just starting your investment journey. First up, let's talk about how AI is transforming the way we invest. Remember when getting investment advice meant booking an appointment with a financial advisor and paying hefty fees? Those days are fading fast. Right now in Singapore, robo-advisors are making waves. These robo-advisors are becoming increasingly popular in Singapore, offering a low-cost entry point into investing, especially for younger investors. According to a 2023 survey by Statista, the transaction value in the robo-advisory segment in Singapore is projected to reach $1.5 billion in 2024. This growth shows that more and more people are trusting AI to handle their investments. These platforms use complex algorithms to diversify your investments across various asset classes, from stocks and bonds to exchange-traded funds, ETFs, aiming to optimize returns while minimizing risk. Some robo-advisors even offer features like goal-based investing, allowing you to set targets for things like retirement or a down payment on a house, and the AI will adjust your portfolio accordingly. This kind of personalized, automated investing was simply not accessible to the average person just a few years ago. Beyond robo-advisors, AI is also being used to analyze vast amounts of financial data, like company earnings reports, news articles, and social media sentiment to identify potential investment opportunities. This is something even the most seasoned human investor would struggle to do manually. Imagine trying to read every single news article related to a company you're interested in. It's practically impossible. AI can do this in seconds, spotting trends and patterns that might otherwise be missed. This technology is also being used to detect fraud and market manipulation, helping to create a fairer and more transparent investment environment. While it's important to remember that AI is a tool and not a magic bullet, it's undeniable that it's changing the game for investors in Singapore and around the world, making investing more accessible, efficient, and potentially more profitable. All right, my fellow investors, let's talk about sustainable investing, something that's really heating up right here in Singapore. Now, you might hear ESG thrown around. That stands for environmental, social, and governance. And it's basically a way of looking at companies beyond just their bottom line. We're talking about their impact on the environment, how they treat their workers, and how well they're managed. Singapore is really pushing the boat out on this, with a hefty $2 billion put aside for green investments by our government. This isn't just about feeling good about where your money's going. It's about smart investing. We're seeing a massive surge in ESG investments across the Asia-Pacific region. Since 2020, they've jumped by a whopping 125%. That's a clear indicator that the market is recognizing the value and potential of sustainable businesses. This isn't just a trend. It's a fundamental shift in how we think about investing, and it's creating some serious opportunities for us here in Singapore. Think about it. Companies focusing on renewable energy, sustainable agriculture, or efficient resource management are likely to be at the forefront of future growth. As consumers become more environmentally conscious, these businesses are going to see increased demand for their products and services, and that, my friends, translates to potential returns for your investments. The Singapore government's commitment, coupled with the rising tide of ESG investing in our region, creates a powerful tailwind for sustainable businesses. All right, so where were we? Yes, digital assets and cryptocurrencies. Now I get it. The word crypto can sometimes bring up images of volatile price swings and overnight millionaires, or worse, rug pulls. But let's take a step back and look at the bigger picture. The financial landscape is evolving, and digital assets are becoming an increasingly important part of it. The Monetary Authority of Singapore, our very own MS, has been actively working to regulate this space, granting licenses to digital payment token service providers. As of now, there are 14 such licensed providers, a clear sign that Singapore is aiming to be a hub for responsible digital asset innovation. This isn't about chasing the next Dogecoin or Shiba Inu. It's about understanding the potential of blockchain technology and how it can improve things like cross-border payments, supply chain management, and even how we invest. Think about the potential for fractional ownership of assets, making investments more accessible to everyone, not just the big players. That's the kind of thing we're talking about here. Now, let's be clear. This doesn't mean all cryptocurrencies are suddenly safe or guaranteed investments. Far from it. Just like with any investment, you need to do your own research, understand the risks involved, and never invest more than you can afford to lose. But the fact that we have regulatory oversight from MS is a big step forward. It provides a level of security and legitimacy that wasn't there before. This isn't about throwing your life savings into some obscure coin based on hype. It's about recognizing the potential for digital assets to play a meaningful role in the future of finance. We're talking about things like stable coins, which are designed to maintain a stable value, or even central bank digital currencies, which many countries, including Singapore, are exploring. These are real world applications that could change the way we interact with money. So, while the Wild West days of crypto might be what you hear about most, the future is looking a lot more structured, and that's something to pay attention to. Now, some of you might be thinking, Iggy, this sounds great, but are there any downsides? Well, like everything in life, there are a few things to consider. One potential drawback is that not all brokers offer fractional shares for all stocks. You'll need to do your research and find a platform that suits your needs. Also, while you own a portion of the share, you'll generally receive dividends proportionate to your ownership. So if you own 0.1 of a share, you'll get 0.1 of the dividend payout. This is still a great way to participate in the company's success, but it's important to be aware of how it works. Despite these minor considerations, fractional investing has democratized access to the stock market in a way we've never seen before. It empowers young investors in Singapore to start building their financial future, one fraction at a time. It's a game changer, especially in a high-cost environment like Singapore, where saving up large sums can be challenging. This also allows for dollar-cost averaging, where you invest a fixed amount regularly, regardless of the share price. This strategy can help smooth out market volatility and potentially lead to better long-term returns. Let me share a real example that shows why this matters. DBS Bank's digital investment platform saw something amazing happen when they introduced fractional shares. Young investors aged 21 to 35 jumped in, causing a 400% increase in new accounts. Their AI-powered advisory service helped these investors earn an average of 8.5% annually. That's the power of making investing accessible to everyone. Now, I wouldn't be doing my job if I didn't talk about the risks. The market can be as unpredictable as Singapore weather during monsoon season. New technologies bring new risks. Cybersecurity is crucial when using AI-powered platforms. And regulations? They're always changing, especially for digital assets. But here's the thing, understanding these risks makes you a smarter investor. It's not about avoiding them completely, it's about managing them wisely. So, what does all this mean for you, my savvy investors? These aren't just buzzwords floating around. These are real opportunities knocking at your door. Think of it like this. AI-powered investing is like having a super smart assistant that helps you sift through tons of data to find the best stocks. It's not about robots taking over, but about having better tools at your disposal. And sustainable investing? That's where things get really interesting. More and more studies show that companies with strong ESG, environmental, social, and governance practices actually perform better in the long run. It's not just about doing good, it's about doing well financially too. For example, a 2020 study by NYU Stern found a positive relationship between ESG performance and financial performance in over 1,000 research papers. So by investing in sustainable companies, you're not only contributing to a better future, but also potentially boosting your returns. Plus, with the Singapore government's push for a green economy, this sector is poised for even greater growth. Now let's talk about digital assets. While they can be volatile, the increasing regulation and integration into traditional finance make them a space worth watching. It's like the early days of the internet, a bit wild, but full of potential. And fractional investing? That's a game changer for those just starting out. You don't need thousands of dollars to buy a share of a big company anymore. You can buy a fraction of a share, making it much easier to diversify your portfolio even with a smaller budget. This is particularly relevant in Singapore, where the median monthly salary is around $4,500. Being able to invest with smaller amounts opens up the market to a wider range of people. So whether you're a seasoned investor or just dipping your toes in, these trends offer exciting new avenues to grow your wealth. Just remember to do your research, stay informed, and invest responsibly. Want to learn more? Check out my video on Never Run Out of Money in Retirement, the MIF strategy. I'll link it in the description below. Don't forget to hit that like button if you found this helpful, and subscribe for more practical investing tips. Drop your questions in the comments. I read every single one. This is Iggy from the Investing Iguana, helping you navigate the future of investing. See you in the next video.